I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it. Fuse like a magnet, lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Damn, I'll still the last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly
Good evening, everybody. Happy Thursday. What is today? The 13th. Anya says the market was a killer. I'm drowning my sorrows. I'm just drinking water tonight, Anya, although I did go to a movie earlier this afternoon, and for the very same reason, Anya. I had a michelada, which was good. And then I watched the movie Christie with Sydney Sweeney. I posted a review of that on Twitter and in Discord already. I'll put it on YouTube later. We can talk about that a little later if you guys want. The movie Christie, a little bit controversial, but it worked out. It was literally the only thing that was in the time slot that I had free early afternoon today. There's a lot of other movies I would have preferred to see first, but having seen it now, it was a good movie. You know, if you like biopics or sports movies, go check that one out. Anya says, Tony, you have to look for natural beauty, not makeup. She wears no makeup in the film, Anya. Yeah, it's a little rough, but she's playing a character and she does it well. In today's video, we're going to talk about this GameStop chart. People keep on telling me or asking me, Tony, when are you going to do a GameStop video? I mean, we've talked about GameStop a lot. For the past year, I've been telling you guys I like to wait for the price to get down in this green box, and I will buy then. And so, as you can imagine, I've been buying down here. Most recent was at 21.25 on 11.7. I have another good till cancel buy order that has not quite triggered yet. Almost got triggered today with this blip down to 20.88. Maybe I'll get lucky and it'll trigger overnight or in pre-market. And, you know, hopefully we don't drop below this box, because if we do, then the people that are calling for $19 are probably going to be correct. If we drop below this recent low, which is around 20.70, I mean, we came right up on it today. I sure don't want to see us go below that, but if we do, I'm saving dry powder to buy, you know, 19, 20, wherever it goes. I'm not going all in here. You guys know by now how I pick my target, and then the lower it goes, as long as I see that that's a relative safety point for me, not instructions for you, then the lower it goes, the more I add. And so if it goes to 20.50, I'll add more than I did at 21.25. If it goes to 19.75, I'll add even exponentially more, and so on. And you guys also know my rough thesis on GameStop, that, you know, at these price levels that it's been trading at, 23, 24, 28, it was clearly overvalued. I know that's not a popular thing to hear, and people have been mad at me for a year, and they call me all sorts of names, and they get mad, and they make 1-hour live streams insulting me. These people are fools that don't know how to properly analyze a stock or run a valuation. And I saw a video from Jeremy over at Budget for Life. Is that? Yeah, Timestamper. Budget for Life. He put up a video today that said GameStop is trading below cash. How and why? I have not watched the video yet, but I thought it might be fun to hear what Jeremy has to say. I don't know what he's going to say, but I have my own thoughts. I've shared them with you guys many times. The big problem is the GameStop pumper YouTube channels think that somehow cash is a point that GameStop should be trading around, and they're lost all up in their feelings trying to figure out how we're at below 21 bucks. Nobody effing cares about cash when you got $4 billion in debt. When you have $4 billion in debt, you need to be looking at net cash. That's your safety net. Net cash for GameStop is around 11 bucks. I'm not saying that's my price target. I'm not saying that is the value. I'm saying if you're trying to compare GameStop's price to cash and you're not thinking of the debt or what we call net cash, you are kidding yourself, or you're allowing social media to kid you, because Wall Street is not looking at it that way. From that net cash position, we can add some other value. We can add value from the operations side of GameStop. We can add value from the interest that GameStop is earning. We can even add optional, if you'd like, speculative value. I do. I know the bears hate me for saying this. I add a little bit of extra for speculative, where I feel comfortable, couple dollars of optionality, I call it, for what Ryan Cohen could do with that cash. I don't hate Ryan Cohen. I think he's going to have a plan at some point to do something to do with that cash, but I still know that I need to be smart about my entry and not listen to all these yahoos that are telling you to buy every day at any price. That is just a really bad analysis of how, look, you got to understand how Wall Street is valuing the play, not these dum-dums on YouTube, because Wall Street is going to drive the price to where they want it. And so if you understand that, then it's just sit back, be patient, wait a year, and pick it up when they drive it there. I mean, I don't know why that's such a hated plan when I tell you guys be patient and understand how Wall Street is valuing the stock. Doesn't mean we have to agree with them, but you should understand the basics of how to analyze a stock. And literally, I see nobody that knows how to do it that's on social media. Very few, in my opinion, the way that I would value it. They all have, they're convinced they're right, and that's fine. Look, I could be totally wrong. Who am I? Just another person on YouTube. But I don't apply hopium analysis to valuation. I just do it like a CPA or a CFA would. And since Jeremy says that he's a financial advisor, I'm really curious if he's going to talk about net cash or if he's going to act bewildered like the cult channels. If he's going to act bewildered, how could it be trading below 21 bucks? This makes no sense. Well, it does make sense if you're willing to expand and understand how a rational person is looking at this trade. Lacrosse News says GME has $4 billion in debt? ? Let me just, so you don't think I'm being too unfair here, let's pull up the balance sheet for you. GME balance sheet, most recent quarter, long-term debt, $4.1 billion, my friend. I know, a lot of y'all don't know about this because it's interest-free, Tony, that's not debt. What's it say right here? It's debt, friends, it's debt. You cannot listen to these goofballs that are telling you don't count that debt because it's zero interest. That is the most ridiculous gumball analysis of this damn stock. Who doesn't look at debt on a balance sheet? Oh, GameStop's different. You can't count that debt, Tony. You don't understand. You can and you should count it. It does matter. Because if you really want a safe entry, if you don't want to be crying, I'm very comfortable with, I'm in the green on GameStop on my position because I exercise patience and try to think, how low could Wall Street drive this thing? I don't want to be on the wrong side of that trade. Active Rehab says, have I seen Newton's new post on the double swap theory? I did. I mean, I skimmed it. Like I said, I think Richard's a good guy. I've watched him a couple times, not a lot, not routinely, not religiously, wink, wink. And I found a lot of his theories fascinating, but a lot of the theory people, it's theory, and I have a hard time making trading decisions based on theory. I like to work on evidence. And again, that makes me very unpopular, and I get it. I have nothing against Richard, and he was one of the more sane people covering this stock, so I was sorry to see him go. He got a lot of grief from people that was undeserved. He utilized, his reasonable theoretical analysis. That's fine. And he had very reasonable advice for you guys on how to trade the stock, I thought. All right, should we move into Jeremy's video, let's just refresh ourselves on a couple things that I look at. Cash and cash equivalents, 8.7 billion. How much Bitcoin do they have? 40, was it 4,700, something like that? Somebody help me out. It's around 400 million-ish, I think. Bitcoin 4710, is that right? Times what's Bitcoin's price at right now? 99,000? 99.6. So we'll say roughly, let's call it $470 million. So 470 plus 8,700 in cash, you know, just over 9 billion. And if we go down here, this will tell you what the net cash per share is. The thing that I look at, 783. There was another book value per share, 1156. So, I mean, these are two numbers Wall Street's looking at. I know nobody on YouTube's looking at them because they don't want to talk about these, but I don't mind. I'd rather be honest with you and say these numbers are out there and you should be aware of them and you should be aware of what they are. You should know what net cash per share is. People, how is it trading below $21 with all the cash we have? Because you're not looking at net cash and you're not looking at book value per share. Yeah, Jersey Recycler says AMC made a new low today. It's good you're not in it. Yeah, I've been out of AMC since November 2024. It's down now 50% since I got out, and everybody got mad at me and said I'm crazy and I don't understand the stock. I don't understand the markets, blah, blah, blah. I just look at box office, cash flow, and upcoming corporate actions. I'm a real dumb guy. I can only compute three things, but those three things told me that this stock was going down in 2025. And we're going to have another conversation about that very same topic on Saturday. I hope to see y'all there. And there is an open invitation to any of you who, for whatever reason, think my analysis of cash flows is too pessimistic, even though I'm just reading from the company's documents. I don't know how that could be pessimistic unless you think the company's a shill. The invitation is open to any of you who want to come educate me on your theory of cash flows. I think, you know, an agreeable point that we could all disagree on is where we think box office will be in Q4 and Q1. That's fine. Everybody can have a different opinion on that. Who's to say? I certainly don't know. I have my ideas and I build my model around my ideas, but that doesn't mean that I will be exactly correct. But there is still a ton of just, it's either purposeful misinformation on how cash flow, liquidity, and solvency work, or these people act like they know what they're talking about and they really don't. I can watch a 40-minute video of someone talking about this stuff and find a dozen mistakes. It makes me really angry because thousands of people are watching it saying, thank you, great DD. No, it was entirely full of misinformation. And I don't say that as somebody who's betting against the stock. I'm saying like any CPA could listen to that video and probably be smacking their head against the wall. Like, what the fuck is this person talking about? So I'm just going to break it down for you like a regular guy. I'm not a CPA. I did take accounting and finance in college so many years ago. But I mean, this is very basic stuff. We're not getting into any esoteric theoretical discussion. Like, you got to be able to understand the basics to make a 1-hour video on the topic, I would think. So the invitation is open, guys. Any of y'all that want to come educate me. And I may even bring on a CPA just to make sure we're all being honest, because I never mind someone fact checking me. So far, the invitation's been out for almost a week. Nobody has offered to come on and defend their particular viewpoint, but I'd love to have a friendly conversation. It's not a debate. It's not an attack. It's just two dudes talking cash flow statements. That's it. Or three dudes or four. Or ladies. You know. Jeremy. Oh, and yeah, I have the final thought. You had asked about AMC's price. I sold back here 434. It's at 238. It is below every green box that I have on here. It's below the 2024 previous low. I mean, we're in pretty bad territory. And if you're in the Discord, you already know what my price target is for AMC and when. We've been talking about this stuff for months. We've been talking about where AMC is headed and why for months in the Discord. I don't talk about it much on YouTube or X because why? Why do I need all the grief? Why do I need all the grief? I don't. People that want to learn are in the Discord. And the rest, you know, you're kind of on your own until I decide to make a video about it. And I'll make a video about it when I buy. And where I'm going to buy is far below where we're at right now. All right, let's get to Jeremy's video. Budget for life. What's up, Jeremy? Let's make sure we got him unmuted. Anya says, do you think Highcroft will buy some AMC? Highcroft is doing fantastic, Anya. We're killing it on Highcroft, huh? What did it hit today? 914, a high on the day of 965. Ooh, yeah. All the haters of Highcroft passed up a chance to buy at 195. It's up more than 4x. Unbelievable. I get it. If you bought in early 2-3 years ago, you're still in the red. I get that, but that was never a trade that I advocated. I was never a buy and hold Highcroft guy. I have a whole playlist. You can check back to the very first video where I called Highcroft fool's gold. Got to be careful, but it's a great swing trade, and I've had a position now for a while in Highcroft. Somewhere around earnings I bought in, and it's a buy and hold for me here till we get the report, the technical report at the end of this year, and then I'll decide what next. But I'm not like trying to swing it. I'm not trying to sell, even though it's reaching new highs. I really want to kind of see what happens with silver and the technical report, and then we'll either be heroes or zeros when we find out. Timestamper Active Mobility saying, don't be surprised if we make 180 million in Q3 and the price point eventually gets walked back down to 21. I might have missed. Oh, the 21 price is only justified by hyper bearish PE 38. I mean, who's to say that 38 is not hyper bullish? I mean, that's a fair discussion that could be had, right? There's plenty of people that think 38 is overvalued. I'm not. I don't care to have that argument tonight. I could argue either side of the argument, and I think really that is where you guys become fantastic investors, where you can understand and argue both sides. If you can't see the other side, you're going to lose in your trades. Doesn't mean you have to agree with them, but you should be able to, just like on a debate team, you should be able to argue either side. That is how I try and approach this play. I am hoping, as Timestamper's saying about upcoming earnings, I am hoping for an earnings surprise. I'm buying GameStop right now. I'm not bearish on it, but I could argue from Wall Street side, and they think it is priced too high. Anya says, do I think Highcroft will buy some AMC? No. No. they got to get the dilution out of the way, Anya. They got to get the balance sheet fixed. It's a hyper risky investment. It's junk bond status. That is the rating that AMC has, is junk. And so anybody that's investing in AMC is taking a highly speculative trade. It would be very silly for Highcroft to buy AMC. But let's hope silver keeps going up. All right, let's move on to Jeremy and see what he has to say.
To your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber. I'm a financial advisor, and this video is not financial advice. What I want to talk about in this video is how in the world can you possibly justify GameStop trading at $21 per share?
Do y'all think he's genuinely confused, or is he setting us up for the great reveal? If you haven't seen this video, do you think he says he's a financial advisor? Is he genuinely confused, or do you think he's going to say, here, let me explain it to you? Marius says, Tony, do you think we're going to see 25 for GME this year? This year, I'm hesitant to. I was talking about that in the GameStop room in Discord today. Like, oh man, at what point do we start looking at buying call options? Because if there is a bounce, it could be a violent bounce. But I just don't know. The overall market is under pressure right now. What did the damn indexes close at today? Down 1.6, 1%, 2.29. I mean, I don't want to be trying to time buying call options ahead of this kind of bloodbath. I'd get murdered, even if I'm buying April $23 options. I'd get killed. But I am thinking about your question, Marius. It is definitely a possibility. It's a possibility that I'm analyzing, like, where do I come in here with a super speculative trade? Do I want to play call options, or do I just keep on buying cheap shares? I don't know. I haven't decided yet. I kind of talked myself out of it today. Talked myself out of it. All right. Anya says, by the looks, you think he's confused. Dink says he's shocked. Timestamper says the goal is to present a pessimistic but theoretically possible view that would lead to the current low stock price, although that ultimately dismisses the most extreme negative scenarios. Look, if GameStop announces improved revenues, net income, and margins, I think, whoever gets it at its cheapest point before the next earnings probably is going to be in pretty good shape. There are YouTubers that will tell you, and I see it on Twitter all the time too, that is definitely happening. No doubt in their mind. I hope they're right. I mean, I'm putting my money on the line buying some shares around here, but I can't in good faith tell you that I know for a fact that all of that is going to happen. I have no way of knowing that with GameStop. Yeah, and the Bitcoin, like what happens with their Bitcoin, yeah, it's a small impact, but that could negatively impact their earnings. I think Q3, it was pretty much just a wash, right? Or a slight loss. All right, let's see what Jeremy has to say.
Right now, a $9.38 billion market cap for a company that right now has $9.44 billion in cash and Bitcoin. How can you possibly justify it? The easy answer, of course, is it's stock manipulation, right? It's just evidence of continued short sellers, naked share.
All right, that's the easy answer. And maybe Jeremy, maybe you're right. What's the difficult answer?
Right, rehypothecation, FTDs, ETFs, swaps, all of the above. And that's probably true. But if we looked at it from a fundamental perspective, is there a way? Is there a way to make this case, to make this argument that GameStop's only worth $9.38 billion? Another way I could say it is, if you had...
Jeremy, I think a better argument would be if you truly can analyze like a CFA or a financial advisor, can you make the argument? Doesn't mean you have to agree with it, but thinking like a debate student, could you sit on the other side of the table and make an argument of how GameStop is barely valued above fair value, book value per share? Because what is the multiple on cash? If you're looking at companies that are holding a bunch of cash, what's the multiple on that? If they're actively utilizing the cash, maybe you can assign it a multiple. GameStop is just sitting there. So in my opinion, the market is not valuing the cash except at cash. And then you got to subtract $4 billion in debt. So we're back down to book value per share, close to 11, 12 bucks. And then we add in the value from operations, the interest income, and some little speculative kicker. And we get, we get above 11 bucks. Why I'm buying it around 20, 21. Clearly, I think there's some value as we get in these lower ranges. But Jeremy, I think you should think about making the case of, should it be valued at closer to book value?
To come up with a fair value of $9.38 billion, what does that mean? If you had to argue that from a fundamental case, what therefore are you arguing? I want to break it down for you guys in this video. Before I get into it, thank you to how many shares we can log. Fair value, if you were to aggregate by weighted.
Anya coming in like a depth charge. She says a lot of stocks are going down. Why shouldn't GameStop? Anya, that is a very reasonable question. And as you know, Anya, I know you know this. We've been saying for a long time, if the market goes down, so is GameStop. And the pumper channels, I call them the GameStop pumpers, who are really no better than the Bed Bath & Beyond pumpers at this point with the amount of nonsense they put out. They keep on insisting that GameStop is some flight to safety in a market crash. That is the most ridiculous thing I've ever heard. There's plenty of companies with a lot of cash. And GameStop will do fine with their cash if the market bottoms out. They'll find somewhere smart to put it, but that's not going to stop the price from falling in a market crash. That's a hopium, they're trying to inject hopium straight into your arm. It's a ridiculous talking point, and it's proving out not to be true, just like we said.
Probability, the floor case, the fair case, and the fly case of both the asset management business together with the retail business, you end up with a worst case valuation of $26 billion.
Oh boy, we might need to break this down in a minute, but I want to answer Davy's question because I don't want him to feel like we're ignoring him. He says, isn't $2 billion their holdings like 0% interest loan? $4 billion, Davy, $4 billion at 0%. That is correct, and that's a fantastic deal. But that money will need to be paid back in cash or shares at some point. So as long as it's on the balance sheet, a reasonable analyst would count the debt and come up with a net cash valuation. Or, if you were close to the exercise price, which we're not anywhere close to it, you might start looking at a valuation where you could say, all right, let's do a as if diluted valuation. But we're not at the point at $20.96 to even be thinking about having that conversation. It's a ridiculous conversation at this point.
or a best case right now in terms of fundamental support, which if the fundamentals continue executing, right, the ceiling would go higher. But right now you could justify even a 211 billion valuation, or for a weighted average 92 billion.
Sorry, I was saying $211 billion seems a little bit crazy. And I'd love to have Jeremy on the show and hear him out.
Which you could say is $208 per share. Or if you wanted to fully dilute the shares, you would call that $143 per share on a weighted average fair value. So how do you end up a seventh of that, right? Let's talk about
operations that are barely profitable, Jeremy, and the fact that the market gives no multiple on cash. That's your answer right there. Video done. You could add a little kicker for interest. You could add a little kicker for expectations of increased profits. You could add a little kicker for speculative value of I believe in Ryan Cohen, but none of that right now gets you anywhere near to $300 a share, Jeremy, or $150. It just doesn't.
About it because first off, what you have to do is negate anything that is forward looking. Okay, so if you are a fair value analyst, then of course you are projecting future earnings and giving some type of discount to those future earnings, right? Some type of probability that those earnings will happen, right? And then you're doing.
Those are all beautiful and reasonable statements, what he just said. If you're a fair value investor, you're making some projections about future earnings and then discounting them down to present value. That is correct.
Some type of DCF on that, or you're taking historical earnings and going from there and basically saying we're not going to project growth. We're just going to wait until it happens, until we know that it happens, right? So you basically have to close your eyes to the Switch, close your eyes to the coming consoles from Xbox and PS or PlayStation, and then close your eyes to PSA and close your eyes to the comments Ryan Cohen's made about collectibles being about a third of total sales for the full calendar year. Basically, anything that hasn't already happened, you just blot it out of your mind. That's the first thing you really have to do, is let's only go with what we already know for sure. Okay, that's step one. The next step is you have to net out all of the convertibles as if they are being paid back in debt and as if GameStop has to pay back that debt right now. And again, ignoring any future earnings that they make from the business and any future earnings that they make from the current cash that they hold. So if y'all watched a recent video I made talking about GameStop's cash floor, we know that even if GameStop pays back all of its convertibles in cash and they don't dilute, they will still.
Not being familiar with his content, but just looking at what he has on the screen here, nothing looks unreasonable what I'm seeing, except maybe later he talks about if diluted on the share count. But this all looks reasonable. I'm curious how it gets to a 200+ billion valuation.
At no point on a per share basis have a cash floor lower than its current cash floor of $20.62, which almost got tested today. Almost got tested today. Incredible. I don't mean that this cash floor can't be, I'm not trying to say that there's no way the shares could ever trade lower than that. I'm saying if you're valuing it fundamentally, you would say, hey, the cash value, the cash floor of this company is $20.62, and whatever it trades above that is what you would call the enterprise value, which right now the enterprise value of GameStop, the asset management business, plus GameStop, the retailer, hypothetically is 100.
I don't think your base starting point, Jeremy, should be starting from a cash floor. It should be starting from net cash. First complaint that I have here from what you just said.
$50 million.
Net cash would
we
put this starting point at like $11, not 20. You could add in interest and income. We talked about that in the last 30 minutes. Add in interest and income from operations, absolutely. But you're starting too high, I think, which is why these people don't understand why the price is being pushed down.
Ignore all of this cash generation, right? Forget all the cash generation, and we decide to net out all of the debt that will be paid back in 5 years, and net out all the debt that will be paid back in 7 years. And again, ignore any of the income that comes during that 5 and 7 year window. Then you get a net cash floor, right? Ignoring the future, what we already know they earned, right? So this 220 doesn't exist. Just going off of historical, already reported numbers, you end up with a net cash floor. So also netting out the difference between current assets and current liabilities, right? So let's say we don't value the book of the business. I mean, there's not much book there anyways, right? 1.1 billion in operating assets and liabilities versus a 29 plus 174 versus 1.0 billion in operating liabilities. Let's say you don't value that $100 million of book value. All you value is the cash portion of the book value. You end up with $5 billion and $76 million worth of cash, right? If you make all of those assumptions in cash.
All right, now he's getting closer to something that I can agree with. Let's see where he goes with this.
So that means the rest of the company, you are saying, is worth the difference, right? If you blot out the future and if you fully net out the convertible debt, then you end up with, okay, right now they have $5 billion worth in cash. So if you take that out of, let's just go with that 9.38 market cap, you end up with 9038 minus B40, an enterprise value of $3.9 billion.
Now here is where I would ask, and I don't know where he's going to go with this, but I would ask, is GameStop's earnings worth $4 billion? Net income annualized $362 million. Is that worth the multiple?
Now, what does a enterprise value of $3.9 billion mean for GameStop? Again, just historically, because again, if we look in the future, you're talking about a company that is on pace to be cranking out $1 billion of net income on a forward 12-month basis. But if we want to look historically on their income, what you could do if you wanted to be hyper bearish is say, as it relates to their interest income, right? All of their gains on just cash and Bitcoin, what you could say is not only are we not going to project the coming interest and gains that will in all likelihood be generated, right?
Let's go a little
Not only
faster
are
here.
we refusing to value the future interest, we also are refusing to place any type of multiple or enterprise value on the historical interest. What does that mean? It means that as it relates to net income, you would say the only thing we care about is operating income. We are not going to value any dollars of enterprise on interest generation, whether you're looking historical or you're looking future. All we care about as it relates to interest and cash is the present, right now, most reported number, and we're going to fully net out the debt that will, in all likelihood, be diluted, right? But we're going to act like it has to be paid out now. So you end up with 3.9.
I'm just going to interject also because someone messaged me on LinkedIn and said, did you hear Jeremy tell people that the GameStop convertible bonds have a 100% chance of being converted for shares? I think that's a very dangerous promise to be making people. There's no way we can do a probability. We could all come up with guesses, right? But to say it's 100% probability that these bonds will be converted, it's a high probability, I think. If GameStop does well and they invest their cash and grow earnings, it's very likely in the next 5-6 years, whenever those bonds mature, that they will be converted. They likely will not be converted early. But let's just say at maturity, it's likely that they will be converted if the price goes up. But to tell people it's an absolute certainty seems like, from someone that's a financial advisor, a very strong position to take. And that's fine. I mean, maybe he has a strong opinion. I'm not willing to make that bet. But what I will say is GameStop 100% would like the price to trade up there at maturity. They would like to keep the cash. They would like to issue shares. That I agree with. But whether or not it can get up there and stay there at the maturity date is not something I can guarantee you with 100% certainty. I sure hope so. Sure hope so.
Billion.
It sounds to me like he's assuming it's a foregone conclusion.
Enterprise value based off of just operating income. And if you only wanted to look at operating income on a trailing 12-month basis, you've got 55.6 million between Q2 and Q1, and then another 46.4 million between Q3 and Q4 of last year, for around $102 million. Sorry, I keep going to the valuation tab. $102 million of trailing 12-month operating income. Okay, so if you didn't project anything, you only valued the historical 12 months, then what type of PE does that give you? B41 divided by B43, you're looking at a 38.8 price to earnings ratio on this $3.9 billion enterprise value. So is that rational, all those assumptions I just made? No, but let's make a couple iterations to get slightly closer to rational, but still very bearish. Again, simply to highlight, how could you possibly value this company the way that it's currently being valued? How could GameStop possibly be a $9.38 billion company? The other thing I want to highlight as it relates to this enterprise value that we haven't even talked about, if you want to get more bearish, is again fully pricing in the future dilutions. So if you know, and again, let's leave the warrants out of it. So let's say they're never able to convert the warrants into cash, but we know that 1.5 billion and 2.7 billion are going to dilute, right? So what do you do in the most bearish case? You basically take the worst of both worlds with the convertibles, right? You assume it's all debt and it all has to be paid back today. You net that out from the cash 100% right now. And then you also assume that it's all going to dilute. And again, you net that out today, right? Forget about time value of money. Again, forget about all the earnings that are going to come between now and then. You fully dilute it right now. And as a result, discount the valuation of the shares proportionally. So a $3.9 billion enterprise value that will be diluted by about 200 million, or sorry, if it's just the convertibles, about 150 million shares, right? That 591.5 minus the 447.2 divided by the 447.2, that is a 32% dilution that's coming in 5 and 7 years combined from the convertibles. So if you price in a 32% dilution from convertibles, you could say that, you could say that the current enterprise value is already pricing in that dilution 100% right now. What does that mean? That means that basically you would take the current enterprise value.
Marius says, what do you think about GME holding its cash? At first he says, I was skeptical, but now I'm like, thank God. I'm glad they didn't invest it all in Bitcoin, Marius, if that's what you're asking. I think Ryan is not looking to become a Bitcoin treasury company a la MSTR unless Bitcoin were to have a considerable crash. I think that he is more thinking about who can we buy or acquire or partner up with when valuations get dropped to the floor in a market crash. And if that happens in the next year, it's going to be very fortunate that he's sitting on $9 billion in cash. That's what I think. I call that the optionality that a bucket load of cash provides you. But in the meantime, I don't give the cash a lot of value in terms of the current share price. It gives me comfort. I know the company's liquid and solvent. There's zero bankruptcy risk. But we have to be very careful about creating a valuation, which is why I'm curious what Jeremy has to say here.
Netting out the cash that nets out the convertibles as if they're debt, and then you fully dilute it or show the diluted impact of, again, those convertibles if they are paid back through shares. So worst of both worlds, a 32% premium gives you a $5.2 billion valuation based on $9.38 billion right now. So again, so hopefully y'all are tracking. And what does that mean? You still would take the same trailing 12-month operating income, but you would end up with an even higher PE, B43 divided by B44. You end up with a 51 PE based on diluted.
You know, this is where we get into that part of the conversation that a lot of people don't agree with me on, and that's fine, which is, what is a fair PE for GameStop? Is 38 rational? Is 51 rational? Stock analysis. And I like to just compare GameStop to its peers, which are brick and mortar retail shops. Although I'm going to be straight up with you, I'd like to get to a point where we're not comparing it to brick and mortar retail. I'd like to get to a point where GameStop has minimized all the retail storefronts and is optimizing on some internet web-based model, like the Power Packs, for example. But if we're comparing to brick and mortar retail, which is where they're generating their operating income right now, the PE ratio is 21. So when you hear me kind of say, 38 might be considered by Wall Street high, this is who they're comparing to. Whether or not that is the correct comparison, that is a fair point of debate. And look, you can have whatever opinion you want. I think that GameStop might be worth a little more than 21 PE ratio. But I also want to understand how Wall Street is analyzing it. So I know that where are they willing to drive it down to? That's my approach.
Equivalent price. So when you fully factor in dilution, that means that what you're saying is GameStop right now is trading at the same dollar per share that it's going to trade at even after those dilutions happen. And what happens when the dilutions happen is shares are created, right? So if you create 50 million shares in 5 years, and then you create another 120 million shares or 100 million shares in 7 years, but the share price doesn't change at all, what would happen is technically overnight the company becomes worth that many billions of dollars more, right? Dollars per share times shares in the float. So what happens in the short term is that the enterprise value can look artificially low, right, at 3.9, because you could argue that, well, basically they're already pricing in 100% dilution, which if the price stayed at 2105 after dilutions happen, that would mean that, assuming the cash doesn't change, right, that would mean that the 3.9 actually is like a $5.2 billion valuation for the enterprise. So hopefully you guys are seeing how if you wanted to be as bearish as possible and blind yourself to what's happening with the company, a 38 PE on a non-diluted basis or a 51 PE on a diluted basis is not that's not a low PE, right? I mean, retailers, if you're at 20 to 25, you're at industry average. If you're at 30 to 35, you're considered an outperformer. And if you're above,
I like this, Jeremy. I like that he is smart enough and honest enough to go look at other retailers. You don't see many other GameStop YouTubers doing this, and this is a very basic starting point that you should be doing. So I'm actually hat tip to Jeremy for having this on here. I have my own little tab where I do the same thing.
40, you're considered a very fast grower, right? If you're in that 40 to even 55 range from a PE basis. So you could say that actually GameStop's growth, if you wanted to be very bearish on how you interpret the convertibles and refuse to forward look on their earnings generation from a interest income perspective and refuse to forward look on their earnings from an operating perspective, then you could say actually, once you net out all of those things, their growth is actually being respected pretty fairly. And again, historically, they are growing pretty impressively. Like their operating income improvement year over year, right? $88 million improvement year over year in Q2, $40 million improvement year over year, $25 million improvement year over year in Q4, after a little bit more of a dip at the beginning of 2024. So their operating income is improving and growing, and you see that 24% to 79% to 401% improvement, which is about to explode even higher, but hasn't yet, right? That gets reported in 4 weeks. It hasn't been reported yet. We can project it pretty accurately, but if you want to be super conservative with your investments, then you would say, I'm not going to assume anything at all about Power Packs just based on an interview from Ryan Cohen. I'm not going to take that CEO at his word. I'm going to look at the SEC filing, right? I'm going to see the actual numbers. I'm not going to assume they're getting a 10% margin on Power Packs.
I am conservative, but I will make some bullish bets about Power Packs. So we're not just going to look backwards. We need to think. We need to use our heads. And we probably all come up with different answers about what's the revenue and net income and collectibles going to be. And that's really where the debate is. It's kind of the exciting thing to see who's going to be right.
It might be 5% for all I know. They might be taking a loss on some of these cars for all I know to try to scale revenue, right? So it's as far as what assumptions here are the fairest or the least fair, if you want to think about it like that. I think it is fair. I think it's too conservative, but fair to wait until these Q3 numbers come in before factoring these Q3 numbers into your sales growth, into your cash floor, etc. That is fair, particularly because this is a brand new business. Power Packs there's no data historically that we can go off of, right? So to say I don't want to value Power Packs at all, I'd say that's maybe a little bit over conservative, but not like unfair.
All right. I like that he said that. It is over conservative. It's not unfair. And it is also my opinion that is how Wall Street is. They're being ultra conservative and ultra bearish, even, you could say, because who knows? And GameStop is not providing any forward communication expectations. So without that data, without that communication from management, like most companies would say, here's our next quarter outlook, what are they going to do? They're going to be bearish. They're going to be conservative. And maybe they'll play catch up, and maybe that's where we get our edge. Or maybe that's where we die on the sword. I don't know. Depends on how Q3 results look.
Not like this is evil and suppressive. And then as it relates to hardware, you know that the Switch 2 is going to sell, right? So to include hardware numbers from Q3 and Q4 as if those are the accurate way to project their operating income, I'd say, again, is a little bit overly conservative and less fair than saying I want to factor in the power pack's income and I don't want to factor in the income that we generated, the margins and the cash from that in that quarter. All that to say, if you were to do this exercise again in a slightly more balanced way, but still very bearish, the other conversation you have to get at is the convertibles, right? Do you fully price in dilution and fully price in debt? Both? You know it can't be both, right? Like worst case, it's either one of them or the other, right? It can't be both, right? And so if you did it as one or the other, which I'd say is much more representative of reality, even the biggest bear would say, yeah, well, it's definitely not going to be both. We just don't know which one it's going to be.
I'm going to skip past this part. I don't want to see an analysis of dilution versus cash when the maturities are 5, 6, 7 years out. You're not going to have to worry, and we're very far away from the conversion price. It's not even worth doing that analysis right now. Wall Street is valuing this stock and the bonds and the warrants based on, right now, we're a long way away from the conversion price. And no one's looking at a diluted value right now. That will be more of an exercise to have when we start pushing $29, $30. So I'm going to skip past this.
$200 million, but the right direction. Negative 199. Just like I think this is off the table.
Same thought process for what if they don't have the cash? I mean, what if they don't have the debt? You got to factor in the debt as long as they have it, and they will have it until the bonds are paid off one way or another. So you don't just get to say, well, what if that didn't exist? Right now, the debt exists, and we're very far away from conversion.
To value, which is just crazy, because this is reality right here. Like the reality is these shares will dilute, right? And the reality is,
no, the reality is not that they will dilute. There's a strong probability over the next 7 years they could dilute. I think, again, as a financial analyst, it's dangerous to make sweeping assumptions like that when you don't know anything about the next 5 to 7 years. Unless you just say, look, I'm a perma bull and I have zero doubt and this is my opinion, then I'd say, okay, you're definitely entitled to your opinion. Sparky, what's up? I see him in the chat. He says, don't forget that the 2028 put, that is protection for bondholders. We have not talked about that yet, Sparky, although thank you. I'm so glad to have some friends like Sparky and others that are bond professionals. Now, Sparky does not trade GameStop bonds, so don't go hating on him, but he is a bond portfolio manager, and he's been trying to nudge me into understanding that the put option on the bonds. Now, I know what a puttable bond is, and the GameStop bonds do have a put option on them, and that just means that the bondholders can put the bonds back to the company, force an early exchange for cash in 2028, I think is the put date, if they so chose. Like, let's say the volatility was wrung out of the play and they're trading far below the conversion price. The bondholders could say in 2028, you know what? We're done with this. Can you just give us our money back? And they get money back at par value. And if GameStop, here's where Sparky's trying to nudge me. He doesn't spoon feed me. And this is not easy stuff if you're not an everyday bond guy. So I'm still learning, and when I feel like I have mastered the topic, maybe we'll talk about it more on a video. But from what I understand, the further the price gets pushed down below that put price, the conversion price, then that actually provides downside protection to the bondholders. It increases, it provides a value increase to them. Even if the bonds are trading, even if the share price is trading well below the conversion price, they're actually getting some value from the price going down by the fact that there's a put option on the bonds. It's hard. I'm not at a teacher moment to be able to explain it any better than that, but maybe that will spark a little bit of interest into you guys to start learning alongside me. How do bond holders get downside protection from a puttable bond? That's one question you could research. Or how does a put option in a bond provide value to bondholders? Sparky, do you have a better way to for people that want to learn about this? What could they type into Grok? I'm looking for books. I'm looking for bond traders. I'm not trying to go Grok this. I'm like really trying to get a college education on this one topic. What I know from talking to all of you guys and many that aren't here today is that very few of us retail traders understand bonds. And so I'm going to keep saying, you guys, when you're dealing with these companies that have convertible bonds, you need to become bond experts, or at least be willing to understand that bond traders do not think like you. Meaning, oh man, I was having some conversations with people on Twitter this week that are just absolutely convinced the bond holders gave GameStop $4 billion at 0% because they're convinced it's going to the moon. They don't need it to go to the moon to make money. All they need is volatility. They don't care if it goes up or down. They don't care if it converts. If it does convert, that's that's the call option. It provides them, what's the word? I was going to say exponential growth. It's not exponential. It provides them growth dollar for dollar with the stock once it goes over the conversion price. It is a value. It'll drive the value of their bonds up tremendously, but they don't need that to happen.
Is that if you factor in dilution, even if you fully...
Sparky, I called up my son. He's finishing his master's in finance and accounting, and I asked him. I kind of quizzed him on. I said, "Have you guys covered how puts work on bonds?" He's like, "Yeah." I mean, he knows roughly how it works, but how they run their arb and hedge strategies and the type of things that we're talking about, volatility trading on bonds, they have not really covered that, even at a master's degree level. So this must be what, PhD level stuff or diploma of actually working in the industry, where the sharpest of the sharp people learn how to arb and hedge convertible bonds. It's not like everyday stuff. If he hasn't had a class on it in 6 years at one of the best business schools in the country, this is not everyday stuff. So if you guys don't understand it, don't feel bad.
You priced it in today, they are still trading at negative dollars, right? You are getting paid to buy this business, which is just crazy. But as it relates to the hyper bearish scenario, I would say the hyper bearish but slightly more conservative. Let's try, what if they don't dilute, but what if we net out all of the debt? So basically, you end up with the same cash, same enterprise value, but then you just take out dilution, right? And so you end up with a PE of 38.
He's still on this thing of coming up with a PE of 38. And so maybe, you know, we're getting close to the end of his video. Maybe the real debate, if you want to use that word, or the disagreement, or the gentlemanly disagreement might be between us and Wall Street, what PE is fair for GameStop. And that's a perfectly reasonable thing to have different opinions, discussion, and debate on.
That seems to be the more plausible bear case, I guess you could say. And let's look at how plausible it really is.
I think the bear case, though, Jeremy, is that they think the PE should be far lower than 38. And I don't know if he's going to get to that. But if this is his bear case, then I don't think he's being bearish enough. He's not thinking like Wall Street, in other words. They're not going to give GameStop a 38 PE this early. Maybe one day, but not this early.
How plausible is it really? So I'd say the netting out all of the cash, I think, is foolish. If you want to net out the future debt, then you should, like, if you want to pull forward the future debt, then I think you should pull forward the future interest at the very least. Even if you didn't want to pull forward the income from operations, like, let's just say the business is a huge wild card. There's no way to know, right? If you wanted to pull forward this debt, I'd say you should at least pull forward the interest income. And even if you thought interest rates were going to plummet, right? I mean, what is the sum of this expected interest over that period? C34.
The other thing that I'm kind of thinking to myself, like if I were doing an analysis like this, I'd be banging my head against the wall if I'm contemplating scenarios where GameStop has not done anything with their cash by 2032. Like, he better have a plan in the next 12 months. I keep on saying, Ryan, take your time, but you don't have forever. The longer he does nothing, the more the stock is going to be punished and penalized, in my opinion. So this is kind of an odd analysis to, let's just calculate the cash floor out to 2032. Buddies, amigos, friends, Roman and countrymen, we better not be talking about a scenario where 7 years later GameStop has done nothing, because we're going to get crushed if that's the case. I don't think that is Ryan's plan.
Oh, you're not going to tell me because I put the plus signs there? Okay, fine. There's $1 billion right there. 1.8, 1.9, 2.6, 2.8. So there's 2.8 billion that's going to be generated in cash. If you want to say generated 2% on a weighted average basis over all this, a $2.9 billion enterprise, assuming they only make $1 billion from cash. Now, at a 2.9 billion, it's not being priced for bankruptcy. So you're not valuing this income that's coming, right? You're not projecting this growth to continue. You're not valuing any of these net incomes ahead, but you are respecting the legitimate health of GameStop's business in this case, right? It's not a negative value. Okay, so you're not declaring imminent bankruptcy. GameStop price at 2105 does not mean, like, to justify that fundamentally, you don't have to argue that GameStop's going bankrupt. Okay, you don't. So far, what you can say is, hey, I'm gonna assume it generates at least $1 billion in cash. And then again, you have to argue, of course, that you're not going to give any premium whatsoever to the net asset value, which I think is insane.
That right there is where I think Jeremy and I could have a good conversation, or anybody in finance with Jeremy, that he's trying to value the cash at 1.7 net asset value. I don't think you'd have a hard time getting me above 1.1, 1.2, Jeremy. Cash is basically worth cash.
I think that's hyper bearish to refuse to give any premium multiple whatsoever to a company, to an asset management company that would be the largest SPAC ever, right? Even if it's only.
They are an asset management company that is doing nothing, Jeremy. They're doing nothing. So we need a track record here.
$6 billion, or even if it's only $5 billion.
We need a plan.
Even $5 billion would be the largest.
Tell us what you're going to do.
It's crazy.
And maybe we can
so
bump
to not
up
give
that
any guidance that I
NAV.
think is crazy, particularly with Cohen's name, Cohen's track record, the growing institutional percentage, right? The track record to be able to raise capital, the track record to allocate investments that generate returns, the record DRS percentage. I think it's totally rational to assume some type of premium. But if you want to be super bearish, you say I'm not going to give any premium to the cash. I'm only buying cash 1-to-1. I'm not a SPAC investor. I'm a deep value investor, right? Okay, fine. Cash is 1-to-1.
I love that he's willing to have these discussions even with himself. I love this. If more GameStop YouTubers could do this level of, whether or not I agree with his end result, the fact that he's trying to look at all angles, I really do appreciate this a lot. At least he's trying.
The other, so to call fair value cash right now at a 6, or if you like somewhere between a 6 and a $6.5 billion threshold, in other words, to assume the minimum that they earn from their cash position before dilution or before the debt has to be paid back, the minimum that they earn is 1 to 1.5 billion. I think is like not insane, not criminal. B50. Oh, no. I need to take this number and take out both of these numbers. Boom. Okay. And to say with a high clarity what you know interest rates are going to do, or a high clarity what you know Bitcoin going to do, of course, is a little foolish. Like they could drop very sharply, right? So, but I think $1 billion as a minimum floor is.
See, what he's doing here is, if I'm following this correctly, he's projecting out a future valuation of GameStop based on if they earned over the next many years $1 billion in interest, then in 7 years it would have a PE ratio of 29, which, you know, might be reasonable in 7 years, but we're trying to analyze it right now.
Is fair. Then you're just talking about, so again, in the barest of bear cases, to say I'm going to give GameStop a $6 billion value on their cash, fair. Again, if you want to argue with me on whether you think it's a good investment or not, or whether you think it's wise to be that bearish on this company or not, that's a different conversation. But I'm just saying, can you fundamentally get to a place where GameStop is actually only worth $9.3 billion, despite having $9.4 billion in the bank? These are the conversations you have to have. And then the trailing 12-month operating income is the only other factor, right? So to call it an enterprise value of 2.9, you're just saying, what is 9.3 minus however you value their current cash? And to say you value their current cash net of their debt, net of the minimum of what you expect that cash to generate, is pretty reasonable. So the only other question is it reasonable? And I'd say, based on this picture right now, is it reasonable to give GameStop a 29 PE, right? A slight premium to what other retailers get, but not a lot of premium? Is that fair? Sure. I mean, that's fair. It's not.
I like that. That's a reasonable analysis, and he's comparing it to reasonable competitors, and he said it's fair.
Crazy. It's not crazy. Is it fair to?
But they don't have $1 billion of interest earned yet. Is my first thought.
To use the trailing 12-month operating income? Sure. So again, right now, is this fair? Okay, fine. But what about in 1 month? Right? What happens in 1 month when the next numbers come out? What does that do for the cash level? Well, the cash goes up by about $200 million. Okay. And then what happens to the trailing 12 month? The trailing 12-month operating income, because that's all we're looking for is operating income. Basically, you add in 142 and you drop off negative 33.8, right? So after they report earnings in a month, their trailing 12-month operating income becomes minus 10.8 here, plus the 79.8 here. It becomes $277.6 million. Literally a $175 million swing in
That would be huge if that happens, and let's hope that it does.
trailing 12-month operating income. So again, if you want to argue that this price is fair right now because you're only looking at historical, okay, well, what does that mean? What does that imply when history keeps historying? You know, the future is about to become the past, baby. And once the future becomes the past, just one quarter.
This is where, you know, those of us that are speculators, I know the meltdowners hate us having this conversation. Like, there are some of us that are willing to gamble that the earnings will be good, or we're willing to gamble that Ryan's going to do something smart with the cash. The meltdowners cannot stand that we gamble a little bit like that. But I will just say, in my defense, GameStop is a tiny percentage of my overall portfolio. It's not something I even really worry about from day to day. I'm in the green. I have reasonable expectations. I'm certainly don't make my identity in my life around GameStop. It's just one more ticker that I speculate in, and I think you should have a portfolio of blue chip companies that have a long history of increasing revenues and increasing profits. And speculative tickers like this should be a small percentage of your account. That's my opinion. That's how I approach it. So I am gambling a little bit that the Q3 will be good. And some people won't like that. I get it. That's fine. Not everybody's a speculator. But I do it within reason. Like, I'm not putting 100% of my account in GameStop. Not even close.
Quarter out, okay? Just one quarter out. What does that do? You add in, you take out a $33 million loss, and you add in a $142 million gain to operating income for a net change, a net swing of $175 million to 77.6. And what does that do to the PE? Right? If you say in 1 month they're going to report $200 million more in cash, you're still going to net out all the debt. They're going to report a $175 improvement in trailing 12-month operating income. Their PE immediately plummets by 67%. Right? And then, okay, so basically the question becomes, all right, fine, GameStop's hypothetically, from a bearish perspective, fairly valued at $9.38 billion. Okay, but if they're still at $21 in a month, is that then fair? Right? Is a 9.9 PE reasonable for?
Sparky says that a business that generates growing earnings, a better PE includes having a business that generates growing earnings. That is really what we need to see with GameStop, Sparky, and I agree with you. And I think that, you know, we're going to find out when Q3 results come in. And I've said in the last several months that GameStop might finally be at a pivot point where they start doing that hockey stick up on operating margins, operating profits, and increasing operating earnings. I hope so. It becomes a whole different ballgame. What I can't do in good conscience every day is come on here and tell you that is a absolute certainty. I can just say, look, if you want to gamble on that with me, I'm gambling. I'm keeping my speculative bet reasonable in case I'm wrong.
For a business that then will have just reported another sequential explosive improvement in operating income and in net income and in cash, and another quarter of declining SG&A, and once you have clarity, at least from a starting place of the type of volume that PowerPack sales is doing, the type of margins that they're commanding, what that means for operating income. No, if anything, the fair multiple goes from a modest 25, 30, 35 to, oh man, this really needs to be valued in the 40s or 50s if it really is growing like this, right? So not only does...
I don't know. I have mixed feelings about this. Like, he's comparing it to Chewy's, Restoration Hardware, Costco. I mean, these companies have demonstrated. I haven't looked at Restoration Hardware, but I believe all these companies have demonstrated track records. Restoration Demonstrated track records. How come I can't find it? Did I spell it wrong? The fuck is the ticker? All right. Someone help. How's he comparing it to them? Let's look at Chewy's. Chewy. I keep on saying Chewy's because we got a restaurant here named Chewy's. RSH, Sparky says. All right. Chewy is bringing in $12 billion in revenue with 5, 7, 8, 9 years of growing revenue. GameStop is not going to be given a PE anywhere close to Chewy because their revenue is declining. That I get it. You know, if the company's profitable, barely, Wall Street is going to penalize you as long as revenue is falling. It just, in my opinion, that's a sad fact, but that is how I view GameStop. They got to turn the revenue number around. So that's one thing that I'm watching for and hopeful. They're only bringing in, Chewy, $162 million in operating income. That's not a lot for that much revenue. Gross margins are nothing to brag about, 1%. Free cash flow, 3%. It seems like kind of a high valuation. Let's look at the forecast. They've got a $45 price target for it. Holy shit, man. They're expecting earnings to double by 2028. I don't know. This seems like it's might be overvalued, even at $33. PE of 95, forward of 24. 95, I mean, just looking at previous results, yes, it is clearly overvalued. But if they grow according to what the analysts are forecasting, it drops the forward PE to 24. Maybe a little more reasonable. Yeah, I don't see RSH. Is it RH? Yeah, RH. PE of 29, forward of 15. What did Jeremy have? $50 per share. Oh, he's looking at dollars per share. Earnings, dollars per share. I thought he was looking at PE ratios. Price divided by earnings. Anyways, if we're looking at a PE of between 15 and 29, again, what does that tell you about how GameStop should be valued? He's trying to make an argument that 38 is fair. $3.3 billion in revenue, operating income $399, net income $106, free cash flow is negative. Gross margins are a little better than Chewy. I mean, this is not really a superior company. $34 million in cash. I guess that's why the PE ratio is so low. I mean, it's not a fantastic company. A price target of 260. Holy, what the? Come on. Look at these revenue earnings forecasts. That's crazy. They're predicting a modest increase in revenue and a quadruple in earnings per share by 2027. Maybe we need to do a deep dive and listen to management. I don't know. Look at this guy. Andrew up here, $320 price target. He's got 1 star. I don't know. Maybe we need to look at this one.
Multiple goes from a modest 25, 30, 35 to, oh man, this really needs to be valued in the 40s or 50s if it really is growing like this, right? So not only does your cash increase, which then the same market cap would represent an even lower enterprise value, but the trailing 12-month increases, which means you're valuing it at even a lower PE, but the trailing 12 months is increasing faster each quarter, right? So the growth needs to be valued more substantially.
Marius is bringing up a excellent question. How is the revenue from power packs being recognized? Like every time you buy one, is it being recognized as revenue, or in a session, if you buy, sell back, buy, sell back, buy, sell back, buy, sell back, does the net of that event count as revenue? I'm not a CPA, and that is a complex CPA question. And I've been sending some feelers out, but I haven't got a good answer back. So I'm just going to say I don't know, but I'm asking the same questions. And if any of y'all are a CPA and you know for sure, let us know. If I had to flip a coin and guess which one right now, my belief is that each transaction counts as revenue. But maybe we'll find out more in the next earnings, like Sparky's saying.
Substantially, right? So you go from a 29 would be fair, hypothetically, to it really needs to be more like 40. So in just a quarter, even from this bearish angle, you could argue that GameStop's market cap should at least quadruple, right? I mean, what type of enterprise value do you need for the PE to then be closer to 40?
All right. I think we've seen enough here from Jeremy to get a good feel for what he's arguing. And I appreciate the analysis, and I appreciate that he's willing to explore a bunch of different what ifs. We need more people like this in the GameStop community, not all the hopium addicts and the chart only goes up and to the right nonsense. We need people doing reasonable analysis like this, and then we actually have something tangible to talk about. I have a DCF calculator that I created for GameStop. I haven't used it since that one video where I was trying to get in the mind of Michael Pachter. Like, how the heck is this guy coming up with an $11 valuation? And I used my DCF model to understand how he was coming up to that, and I made a video. And then people, of course, immediately said, Tony said it's worth $11. No. Why would I be buying at $20 if I think it's worth 11? I'm just trying to get in Wall Street's head. How are they coming up with these valuation targets? And they're very bearish. They're not giving any credit to future revenue growth. They're not giving any credit to the cash. They're using the most pessimistic view possible, and that's fine. They have the right to do that, and they also have the money to push the price down if they want to. So that's what I've been talking with you guys about for the last year, about just be careful where you get your entry, because do we have the money to move the price? I mean, even the GameStop people know, and I hear them say retail's not moving the price. Okay, then you better understand how the big money is thinking about this trade. And on top of any short hedge fund that wants to push the price down, you got $4 billion worth of bond institutional owners that are mucking around with the price every day too, running their little bond arb and hedge strategies. So all that being said, I think it might be time between now and the earnings date to dust off the old calculator, the DCF tab, and see, if I put in a bullish expectation for revenue and net income for Q3, what does it crank out as an output? And I'll even be bullish on my assumptions that that growth is going to go up. Maybe we did hit that pivot point. So you guys can, look forward to that video in the coming weeks. I know there was somebody hounding me every day, like, where's your DCF video? I do stuff on my timeline. There's really no rush. Really no rush until we get closer to the earnings date, especially when the price is coming down. Just breathe, chill, understand how Wall Street's looking at it. Understand that GameStop is not a flight to safety in a market crash. Be careful. Keep some dry powder on the side in case the market continues down and you really like GameStop. If that is your thing, you might get a chance to pick it up a little cheaper. I'm not calling for $19. That's not me. That's Nicholas. But if it drops out of this green band that I have drawn on the screen, if it drops, GameStop, where you at? If it drops below this, then yeah, we could see $19 again. I would like to see some stability right here in this zone. We're at a key moment, friends. I have my next buy order in under this demand zone. I don't know if I'll get it. I've been buying here, at close to these prices where we're at right now. But I'm not going all in. I'm saving dry powder in case the market keeps on having a little bit of weakness. Kenneth, what's up? He says, any thoughts on AMC's multi-million investment in Nova Sky? I've seen people, Kenneth, having space calls about it. Every time AMC comes up with something new, everybody wants to say that's the next thing that is going to save this company. Popcorn, candy, and now it's drones. Drones are going to save AMC. Look, what do you think the total addressable market is on that? First of all, it's pretty tiny. And then what's AMC's cut on that? It's a fraction of tiny. So is it going to move the needle for AMC? No, but if it is profitable and if it becomes a growing business, then every little bit helps. I'm glad they have the in-house candy. I'm glad they have the popcorn in retail stores. I'm glad they have the merch. I'm glad they have the drones, as long as it's profitable. But am I going to make videos saying that drones are going to save AMC? Absolutely not. How about we wait? It's been, a year now, and we still have no idea if the popcorn or chocolate are even profitable. We have no idea. So what does that tell you? They don't communicate those level of details. And look, I hope it works. And I will remain optimistic that it contributes positively in some way. But will it be a meaningful way? How the heck do I know? I'm focused on box office. Any final questions? Let's take a quick look at BYND. Because, man, go back and look at any of my videos, the comments about people at $7 and $8 who said, Tony, you're going to be wrong. You don't understand the filing. You don't understand the share count. These shares aren't tradable. Well, I'm pretty sure I do understand how to read filings. I'm pretty sure I do understand how tacking exemption works under Rule 144 of the Securities Act of 1933. And I'm going to continue to say that we did the correct call. Taking profits into this run-up and then saying, get the heck out, because people are filling your head full of nonsense. And it's been a month now, and the price has fallen down to $1. Haven't seen anybody back in the comments saying, gosh darn, Tony, you were right again. They never come back. They love leaving all the insults, and you're going to be wrong, buddy. You know how many times I've heard that in the past 5 years? You beyond people. Heard it a lot. How many times have we been wrong, gang? I don't say that. I don't say that to be mean to them. I'd like to get them in the fold here. I'd like to help a few other people out. Why are you doing this? Why are you talking about this stock? You must be short. No, I literally am trying to save you money. And encourage you to read filings yourself and properly learn how to interpret them and read financial statements and anticipate corporate actions, AMC. Because it doesn't matter what's on the chart, doesn't matter about points of interest, doesn't matter about Doritos and lines. None of that bullshit matters when you're in a money-losing company that has corporate actions on the near-term horizon. The filings, the corporate actions are going to determine what happens next and beyond. There's a shareholders vote next week. And in AMC, are we back? Let me know if y'all can see me. For some reason, the internet blanked out. All right, y'all can see me. I don't know why that's been happening. That happened a couple days ago. That is frustrating. It's like my whole internet just stops for 5 seconds. What I was saying is I don't care what anybody sees on the chart for AMC. I don't care about points of interest. The algo did not get switched to Highcroft. It's a bunch of horse shit. Sorry, Nick. The corporate action in December is going to drive what happens next in AMC. And the box office, of course. So a couple people asked me today, as I was doing my movie reviews, are you back in AMC yet? No, I'm not. It's too soon. Too soon. I am watching it closely, daily, and I've shared my thoughts in Discord of where I think it's headed and why. But until these things play out, I have no interest in trying to catch a falling knife. That's not me being bearish. That is me reading corporate filings and making some reasonable assumptions about what's going to happen. All right. Anya said, what about RLAIF? That is our one little speculative AI play, Canadian AI company. They are completing their merger tomorrow, Anya, with AIP. And from what I am told, the company is, there is going to be an analyst report. They're trying to educate the analyst on how they're going to monetize this new deal with AIP. And we need to wait and see what the revenue looks like or what the analyst price target looks like. So this is a speculative non-revenue ticker. The most speculative of everything. Non-revenue companies, but we're gambling a small amount in it because we anticipate it will become a revenue company soon in the next quarter or two. And that will kind of determine what happens with the price. AI companies can get massive market cap valuations. This company is only valued at 60 million because of no revenue. But, you know, things could change if the company starts posting, I don't know. What's it going to be? 2 million, 10 million, 20 million? I don't know. And then maybe you get a bigger player like Constellation Software interested in buying them out. I mean, this could be an interesting play, but you got to understand this is a coin toss still. Now, there are people that are convinced it's going to $55. That is not me. I just think it's a fun AI bet with a reasonable risk to reward potential. And there will be some future dilution in this play because they did telegraph that part of the reason of bringing AIP on board with Railtown was to acquire some of Railtown AIP's affiliates, and they will now have access to the public markets to either issue additional equity or raise debt to pick up some of these affiliates for more revenue. So, it's kind of hard in my eye to call it with certainty, but it's an interesting little side play. Anya thinks it's going to $20. My goals are a little bit more modest, Anya, but I would not say $20 is impossible if they post a decent amount of revenue over the next year and get a buyout. It's a fun little side play. AMC closed the day at $234. GameStop closed the day at $20.96. What's it doing after hours here? $21.02. All right. My last buys on GameStop, not counting the buy and sell I did in April and May, were at $21.61, and most recent $21.25. And as I said, I have some good till canceled below this green zone waiting to see, maybe we get some weakness. We'll see. Do I post my trades? I usually telegraph my trades in the VIP. If I putting in a good till canceled, I'll let you guys know in the VIP Discord when I put in that order, and I will let you also know when it hits. There are people saying, show your position. My position doesn't matter. I'm not here for bragging rights. I'm not here to impress you. My life doesn't revolve around GameStop. It's one ticker of many. It's not the largest in my portfolio. It's a small speculative risk play that I swing trade. So my position doesn't matter. What matters is we have consistently been booking profits on this play, and we're not down 10, 20, 30, 40% like the people that are saber rattling, show your position. I show my trades. I tell you every day where I'm going to buy and when, and I follow up with that. It's no secret. You can get mad at it all you want. Patience and understanding how Wall Street is valuing this play will go a long way in improving your trading strategy, and you got to separate from these hopium pumpers. I mean, it's fun to be part of a cult. It's fun to have people to hang out with, but I think it's more fun to be green in a play. Anya says, I'm not a promoter, but I made my yearly fee for the Discord back in a single trade, so the Discord is a no-brainer. Thank you for the vote of confidence there, Anya. All right, guys, we're going to give it a wrap here. And Jeremy, thanks for letting us review your video, and you're welcome to come on the show anytime. He seems like a reasonable, rational, normal guy. I'm always happy to have guests on the show that are not toxic, doxing, insulting nincompoops. We're looking for a community of like-minded, reasonable traders able to do some real analysis, and sometimes we can get an edge on Wall Street if we can analyze just a little bit better than them and get a good entry. Active Rehab says, what does the Discord offer and what price is it? There is a free Discord, Mr. Rehab. There's a link in every video. It's free if you just want to hang out. But the real discussion happens under the various levels that are offered for a fee. I forget what the cheapest one is. I think it's $9.99 a month. And the VIP is a little more expensive. That's where a little more concentrated time and discussing my trades. But don't come in the Discord for hopium, or, you know, we're calling out 20 different moving tickers of the day. This is a deep DD Discord of rational and reasonable traders. We have apes, of course, and that's fine. But my Discord is not to call out a bunch of tickers. You can set up a screener on your chart just like this and find your own tickers every day that are trading. If you're looking for pre-market movers, you don't need someone in Discord to give you those. But what are you really getting? I'm available in the Discord from the moment I wake up until I go to sleep. So you're getting my time and access to a bunch of other rational people that are looking at a lot of different tickers. And we're looking at speculative plays, we're looking at blue chip plays, we're looking at crypto plays. It's not a one ticker community. And it's not a one strategy community either. It's, hey, let's have a discussion. Here's what I'm thinking. What do y'all think? Discussion and debate is encouraged. What do we discourage? Being a dick. And we don't have any of that problem. And even if we did, you know, you'd be gone in a second. All right, ladies and gentlemen, thank you for your time tonight. I look forward to seeing you on Saturday evening for the mystery guest. Nobody's guessed it yet. And if you are an AMC content creator, social media personality, maybe you're not real happy with me for how I'm talking about balance sheet, cash flows, liquidity concerns, I welcome you to come on the show and teach me your viewpoint. Like I said, we might have different opinions about box office, and that is totally cool. But when we talk about balance sheets, liquidity, solvency, and cash flows, we're going to stick to GAAP accounting. And because I'm hearing a lot of misinformation on AMC, and I kind of want to put this to bed so that you guys are armed with the most reasonable analysis of what's going to happen in the next 5 months. Might not be exactly what you want to hear, but you will be the best armed traders in what to expect, I think. I don't know. Maybe I'll be wrong. Thank you, guys. Have a good night. We'll see you on Saturday.
Down by the dip, gotta hold our ground. We've been waiting for so long. Hedges rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold our ground. Hedges gains are dead and gone. Fuck the shorts, we're going on. If you doubt it, sit and stare. If you love it, buy a share. A green candle up, a red candle down. By the dip, gotta hold our ground. We've been waiting for so long. Hedges rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold our ground. Hedges gains are dead and gone. Fuck the shorts, we're going on. If you doubt it, sit and stare. If you love it, buy a share. A green candle up, a red candle down. By the dip, gotta hold our ground. We've been waiting for so long. Hedges rain will soon be gone. A green candle up, a red candle down. By the dip, gotta hold our ground. Hedges gains are dead and gone. Fuck the short, we're going on. If you doubt it, sit and stare. If you love it, buy a share. Green candle up and red candle down. By the dip, gotta hold our ground. Hedges gains are dead and gone. GameStop's rise is going strong. shorts, we're going long. A green candle up, a red candle down. By the dip, got $4 ground. We've been waiting for so long. Heavy rain, will be gone. A green candle up, a red candle down. By the dip, got $4 ground. Heavy gains are dead and gone. But the shorts, we're going long. If you doubt it, sit and stare. If you love it, buy a share. A green candle up, a red candle down. Buy the dip, got a $4 ground. Keep been waiting for so long. Heavy rain will soon be gone. A green candle up, a red candle down. Buy the dip, got a $4 ground. Heavy gains are dead and gone. But the short, we're going long. If you doubt it, sit and stare. If you love it, buy a share.
Up and to the right. Up and to the right. Up and to the right.
Hello, millionaires. Short squeeze plays where fortunes flip. GameStop's journey, an epic trip. From humble roots to the moon we fly. A company's dream will amplify. Reddit warriors, keyboards in hand. With their eyes on the prize, they took a stand. No one's selling, we're here to fight. How does it go? Up and to the right. Up and to the right, we're in for the ride. It's us on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar, molasses in sight. Up and to the right, we're in for the ride. It's us on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar, more assets in sight. Hedge funds trembling, Kenny's in shock. GameStop stock, you never stop. From diamond hands to rocket ships, we're not selling, we buy every dip. Up and to the right, we're in for the ride. Up and to the right, it can't be denied. Up and to the right, through the day and night. Up and to the right, more assets in sight. Billions in cash on the balance sheet. We will win even if they cheat. Dilute us more, we don't care. Book value grows with every share. The doubters say it can't be done, but the retail army we've already won. With every share we'll never stop. Investors say we love the stock. Up and to the right, we're in for the ride. It's us on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar. Up and to the right. Up and to the right. We're in for the ride. Together we'll soar. Up and to the right.
Surprise!
We're gonna win.